Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. Welcome to the Trader Nick and A1 stream for the Fed rate decision coming up in a couple of hours. Now, I'm not Nick, obviously, so don't be too disappointed, but you do have Nick coming up later to actually do the stream with you. Oh, sorry, to host the rate decision with you. So that's why he's not here right now. It's because he's saving his energy so he can deal with all of you later. Anyway, happy Wednesday. I hope everyone's doing well. CFD Trader, hopefully I just answered your question, my friend. Slugmeister, World Trades, James Finhorn. Good. Hope everyone's well. So, busy day. We had the Bank of Canada rate decision. They cut 25 basis points. We've got the Fed. So, let's get all of this stuff out of the way. I'm sure people will go through it with you later on the stream as well. We've got a really good lineup today. There's obviously me, not tooting my own horn. You've got Marco after me. Then you've got the mythical Chris Pulver, and then there is obviously the one and only Nick. So yeah, good lineup today. So you should get lots and lots of value. Anyway, the Fed is set to cut 25 basis points so far. I'm saying so far. This is what the CME FedWatch tool is saying. We've got a 95.8% probability of a 25 basis point cut and only a 4.2% probability of a 50 basis point cut. Now, if anyone has any guesses on what it will be, hold, cut 25, cut 50, do you think they'll hike? I mean, if they hike, I think there'd be some serious problems, but you know, there's always some contrarian thinkers out there somewhere. So why can the Fed not cut 50 basis points if inflation keeps rising? Let's have a look. Now, a little bit of self-promo just before I get into this. I did make a YouTube video. It's only 15 minutes. It's not a long one, but I did put a lot of time and effort into making it. And it goes over central banks in a lot of details. If anyone doesn't know what's going on today, I would suggest going and checking it out. It's completely free. It's on my YouTube channel, but it goes over all sorts of stuff. It uses the EdgeFinder data as reference points, so you should understand what's going on to a certain extent. Anyway, why can the Fed not cut 50 basis points if inflation's going up? Well, this is where we've got to understand what the Fed is prioritizing. So yes, inflation is going up. However, it's creeping up slowly. We're not seeing inflation rocket. We're not seeing anything overly concerning, although, of course, it's drifting away from the Fed's 2% targets. However, the main problem that we've got going on in the US right now is the labor market. So we can see NFP, non-farm payrolls, has been dropping and dropping. It's been on a relatively steady downtrend since February 2024. So over a year, NFP has just been dropping. So that's obviously not a good sign. That shows deterioration and weakening inside the labor market. ADP, pretty similar, although it's not as drastic. And anyway, we're not going to go into ADP in this video. In this stream, not this video. Unemployment claims is also a big concern. Unemployment has been staying within a 4.1 to a 4.2 range. And this has been going on since pretty much July 2024. Now, we did break out of this range on the last release to 4.3, again, signaling a weaker labor market and deterioration. Unemployment claims, again, has popped up. So we've got all of this data coming in that, again, yes, inflation's going up, but the labor market needs some serious TLC. So what do we normally expect? When inflation goes up, we expect rates to go up. When inflation goes down, we expect rates to go down. It's exactly the same with the labor market. When the labor market goes up in terms of its strengthening, we expect hikes. When the labor market is weakening or going down, we expect rates to come down as well. So in this situation, the Fed's got a bit of a sticky position because inflation's going up, labor market's going down. And when I say going down again, I mean weakening. But because the labor market's in a much worse position than inflation, the Fed can't afford to cut 50 basis points, again, because inflation is going up. However, they also can't afford to hike or hold because the labor market needs that attention of those rate cuts. So that's my view. That's the way I perceive this situation. So yeah, that's that. So it seems like we are going to be having a 25 basis point cut. I wouldn't say we're going to see any reaction from the market, to be perfectly honest with you. This has been getting priced in for a very, very long time. I mean, since basically the start of this year, the dollar's been pressured. So we can see here, January 2025, the US dollar's been pressured by tariffs, trade wars, obviously generally weaker data. We've also got those rate cuts getting priced in. It's been getting held off, and now it seems like today is going to be the day. So I wouldn't say that the rate cut's going to happen and the dollar's really going to do much. What we need to pay attention to is the forward guidance. Now, forward guidance comes in two forms, kind of. We got the statement and we get the press conference. So in both situations, we'll be able to read between the lines, interpret what the Fed is saying and what their concerns are, where their focuses are, and those types of things. And that's how we can then start building our ideas for what the Fed will do next. And then we can start placing trades on those ideas. So for example, if the Fed says, okay, we're going to, this cut was mainly to prioritize the labor market, our attention might have to go to inflation. Okay, well, then we need to start watching the inflation prints a bit more closely than we already do. And again, depending on what inflation print says, then we can start again pricing in what we would expect the Fed to do next, whether it be hold, cuts, whatever. So that's the TLDR, if that's the right word, on the Fed. Now, in terms of markets, I've got no positions. I've got one stock position, but that's a long-term hold, so I'm not going to go over that. I've had some really good trades. So we had a US 30 position this morning. I placed it yesterday, closed it out this morning or during New York Open. Obviously, I don't want to leave a trade open, really, if avoidable, during the Fed. We had a great trade on the Nikkei. I showed you guys this trade. Finally closed it. We were just stuck in consolidation. I didn't see any value in keeping that position open. Had some absolutely horrible positions as well. I had a trade that got stopped out literally a minute before I came on today. It was on the Euro Aussie here. So you can see I just got ticked out or tapped out as I was about to come on stream. So this one wasn't great, but it was quite a good trade in hindsight. I probably still would have taken it if I could go back and reassess it. It was basically just looking for the fib retracement. Euro Aussie, in my opinion, is quite bearish. The Australian dollar is doing very, very well for itself. So it was just to see if we could get something running. Didn't manage to get that. But yeah, there's not been anything overly interesting in the market. It seems like we're on pretty much just a wait and see. New Zealand CAD as well was a pretty crap one. But yeah, it seems like the market is obviously just waiting for the Fed. IDC, or I don't care, thinks they're going to have a surprise hold. That would be interesting. I think if the Fed does anything other than a 25 basis point cut today, we're going to see a little bit of havoc in the markets because, again, it's highly anticipated and it's highly expected. So if there's any deviation from that, we're going to see a very, very quick repricing in whatever direction that we see. I wouldn't be surprised if Powell cuts 50 basis points just to see what happens. It is possible. I'm not 100% ruling it out, but I would be surprised. But yeah, I wouldn't rule out the idea. Big news for the unemployed. I wouldn't say it's just for the unemployed. All my positions closing FX account cash stocks are running, will be okay. Zero leverage open. Yeah, me too. I'm chilling right now. I am just waiting to see what happens. I'm very, very excited, actually. I'm a little bit annoyed I missed silver. Even to be honest, even if I was looking to place trades, I wouldn't have taken it. Obviously, we've got wait, hold on. What was I trying to say? Even if the Fed wasn't talking today, I probably would have still missed this trade because I wasn't paying attention. However, obviously now in hindsight, it does look like it would have been a great opportunity to be a buyer. I still believe that silver is an amazing opportunity to just buy dips. Obviously, when I say buy dips, I mean do it responsibly. DCA, very low risk, average into a position, not you know, 1% risk, 1% risk, 1% risk. That would be crazy. But yeah, on reasonable pullbacks, like what we saw today, a very small position just to build up something would be really good. It does seem like silver wants to go towards 44. Depending on what happens today, it could happen quite quickly. Pretty similar thing here on gold. Gold has actually reached the general bank target of 3,700. I would honestly say the next real target for gold now is 4,000. I don't really see any reason it couldn't, especially if the Fed is now going to be starting an easing cycle. I think that we could. Let me just fix that. Yeah, I don't see any reason we couldn't see gold to 4,000 over the coming, maybe even weeks. I was going to say months, but weeks maybe. Bro, give us a tip about gold tonight. What's going to happen? Okay, so without pulling punches, I think we are going to see further dollar weakness. So the reason I think that is, although I don't think we're going to see any reaction from the rate cut itself, because again, I think it's very highly expected we're going to have 25 basis point cuts. However, from the forward guidance, I think Powell is going to sound quite dovish. I mean, I don't really see how he couldn't. I suppose the only crutch really would be the higher inflation. But yeah, I do think Powell will come out dovish, which will be a bearish factor for the dollar, obviously then driving gold up. But I'm saying this based on what I think and the way I'm perceiving the current data and the current landscape. It doesn't mean that's what's going to happen. So please don't go now and buy gold because I said that. That would be very irresponsible. Even though I think that, I'm not taking that trade, you know? Hopefully, hopefully that got through. Do you have a YouTube channel? I do. A1 Trading just put my YouTube in the chat. I don't post very often, but when I do, I try to give as much value as possible. Would that cause a sell-off in the indices if it's out of what's expected? It depends, James. It depends what out of expected is. If it's a 50 basis point cut, that would cause the indices and equities really to rally. Again, we've got to think about what interest rates do for businesses. Well, higher interest rates isn't good because it makes borrowing money more expensive, and it makes credit generally just less accessible. So it means people will spend less at these companies. These companies can borrow less money to expand higher. So generally, higher rates is a negative for the indices. But in this case, if we get a 50 basis point cut, the exact opposite happens. So what we could see is borrowing becoming much cheaper and easier, credit flows more freely. Again, consumers can spend money more easily at said companies. Said companies can then spend money more easily and cheaper to expand higher, et cetera, et cetera. Obviously, that's a surface level explanation, but hopefully you get the idea. Again, I do go over all this on the video I mentioned. It's the newest one on my channel. I'm not trying to self-promote the video so much, but obviously today is about central banks, so it's just coming up a lot. Buying this market is like picking up pennies. Picking up pennies from a steamroller. That is a very good analogy. Big Red. Sorry, Big Red. I don't know why I got confused on that name. Has anyone seen gold to copper ratio? I haven't actually. I don't pay any attention to copper. Well, other than the chart, I don't pay any attention to copper. I'm still convinced that we're going to see lower prices, and I don't have a solid explanation why. It's just one of those feelings that I've got. Been in the markets for so long, it feels like a trap. So there's no way I'm touching. No way I'm touching copper right now. Ball out's here. Ball out. How you doing, my friend? Wazim, if it's 25 basis points, don't you think it might be buy the rumor, sell the news? It very well could be, actually. That is a good point. We could see something like that. And I'm glad you said that, because I didn't even think about speaking about this. So what you could get is basically the opposite of what I said. So as rate cuts have been priced in so much and so highly expected, we could, and this is a big could, have the rate cut, people take the trades out of the markets, close positions and take profits, and we actually see the dollar do quite well. Now, do I think that's going to happen? Probably not, but it could. And could is a big enough thing for me in the markets to not get too involved, or to get involved at all in this case. To what extent do you think news is already priced into NQ? 100%, Simon. So everything that you and I know right now, with the highly expected 25 basis point cut, higher inflation, weaker job market, the market's priced all that in already. Which is why I'm completely flat now, because I need to see what the forward guidance is going to be and see what Powell's focuses are and what his main talking points are, and then I can start rebuilding some of my ideas. Because as swing traders, which I assume most of you are, otherwise you wouldn't be here, whether you realize it or not, a large part of swing trading is derived from central banks and interest rates. So everything feeds back in. So the unemployment claims that you all come here to watch, the CPIs you all come here to watch, all of that feeds into what is the central bank, in this case the Fed. What are they going to do? And that is what's moving markets. So guys, be careful. FOMC price action showing that even with the decision, DXY could strengthen short term. Very well could. We'll have to see. And that's the thing. So when it comes to things like what we're having today with the rate decision, specifically the press conference, even if you manage to get through the statement and the rate decision itself, you have no idea what Powell's going to say. Unless you know Powell, or you got his script, or you've got the statement already, you have absolutely no idea what he's going to say. You can have an idea. So there's no guarantee. So Powell could come out and say anything, and that could kill your trades. Obviously, I'm not saying he would because of regulations and all that sort of stuff, but whatever. We're going into pedantics. There's no need. DXY will move up short term for sure. Fed has to stay hawkish because of inflation. Jobless claims are not bad enough yet. I think emergency cuts will be coming later. I disagree, actually, GT. I think it's the opposite. I think the inflation situation is less important than the current landscape of the labor market. I think the labor market, again, needs a lot TLC right now. All of the indicators are flashing red for the labor market. Again, I'm just going to show this again. I've got about 10 minutes left, so I'm kind of rushing through things. So I apologize for not covering things in as much detail as maybe they require. Anyway, as we mentioned at the start of the stream, NFP has been just dropping and dropping. 941, I love you too, my friend. Oh, by the way, just before we go and continue, I've got a new quant. So I've been working really hard to do a lot better with making content. Anyway, what I thought was, why not expand my team? And I've got a new quant. So he's now the junior. We've still got Mr. Cat, that is the senior quant. He's now got a junior that's working below him. His name's Milo. Anyway, NFP is pretty dire. Unemployment rate, again, has ticked up for, when I say ticked up for the first time, I don't mean ticked up, as in numerically up. When I say ticked up, I mean it's ticked up out of this range for the first time since August 2024. So again, over a year. Unemployment claims, again, moving to the upside. So yeah, generally speaking, again, this is the way I perceive things. It could be, I could be completely wrong, but this is all my views, my opinions. That's why I'm here. So I'm long crypto. Should I close it? I have no idea. Long which crypto, what price, and what was the reason for the trade? Hey, it really depends. So, generally speaking, I would say either trail stops, reduce your position, take some partials, but then you could turn around and say, well, I've been in since 50K. Well, obviously not in that case. So I need a little bit more context than that, my friend. Messaging issue on Discord. Bullet, I will. I know I keep saying that, but I just completely forget. Bashi's had a pending message on Discord for about 3 weeks. I just don't check DMs. Inflation is less than 3%, not much of a problem for the Fed. That's true. However, when you wait for a problem to get to a point where it becomes a big problem, that's slow reactive in my view. I'm not talking from the Fed's point of view. Again, this is just my view on things. If the Fed is just going to allow inflation to run away because it's actually not that bad. It's bad, it's not great. It's still 1%, well, 0.9% above the target. How long will they allow that for? On the other hand, inflation could just tick down again on the next print. I don't know. So again, the whole thing, everything I'm saying, everything everyone else on the stream will say later on, just comes down to what Powell will say. So no one can give you a solid answer until then, really. We can give you our opinions, our views, what we think, all that sort of type of stuff, but how about if we wait till tomorrow for a trade? Tomorrow makes more sense, but then you've also got to keep in mind that we have the Bank of Japan rate decision on, for me, it's Friday morning. I think it's like 4 a.m. on Friday, so depending on where you are, just pay attention. So if the Fed doesn't cut, I think it'd be a bit of a concern, in my opinion, and I would expect the dollar to gain some strength on the back of that. Where do you live, Chat and Nick? I can't answer that on Nick's behalf. I'm in the UK. Nick's in America. I'm not going to dox him, though. Hey, James, on some dollar short trades right now, you reckon I should close before the news or hold? Again, I need more context. Depends what prices, which assets. Because if you just entered, then yeah, probably close at break even and just chill for a bit. But if you've had them open for a couple of weeks and you're in good profits, maybe just trail stops or leave them to run. So as a blanket statement, I would say if you've got positions open on the dollar now, and again, this is very, very dependent, this isn't financial advice. Let's just say this, for example, I would trail stops to break even, and I would also consider taking partials. I don't actually do partials. I don't like doing that. I like to just close positions fully. But if you do take partials, that's also a consideration, or just completely book the trade, just realize the profit and just get out of the market. Sometimes, as traders, we've got to take risks. That's the whole nature of the job. But sometimes you've got to realize when it's better to be safe than sorry. There's a certain limit on risk taking and also sitting on cash. And as for the other people asking if we should close trades, I'm going to be honest, and this is going to be very, very blunt, and it might even sound a bit mean, but you should already know what you're going to do. You should not have a position open right now if you don't know what you're going to do with it. So this trade, for example, the one I took on the Dow last night, I had a very, very clear idea on what my plan was. It was either exactly what happened, where I'll just close it for a profit before we have the Fed, or I will move to stops to break even, or I'll just close it. Obviously, I've got a few different situations depending on how the trade is developed. So if it's in drawdown, I'll fully close it, realize the loss, and that's fine, rather than trying to gamble, trying to get back into profit. Move stops to break even or full close. So you should have all of these ideas already when you place a trade, especially this close to a news event. Any thoughts on gold? Yeah, I would expect gold to do okay today. But again, it really depends. It's very, very difficult for me to sit here and say, I think gold's going to be higher or lower, because it's all just down to what Powell says, in my opinion, right now. $25 basis point cut, silver miners will sell. I don't think we're going to see much of a reaction on the rate decision itself. Generally speaking, rate decisions are priced in way ahead of time. And again, we do have a very large expectation of that 25 basis point cut here, 95, almost 96%. So again, it's not going to be a shock to anyone. We could see a sell the rumor by the news type situation where we get the rate cut and actually the dollar strengthens off the back of that. But again, it's very difficult for me to say if that will happen or not. But if that is a situation you should prepare for. I have Euro Australian sell. I'm safe. I think I'm safe. Okay, mate. If you think you're safe, then fine. Let the trade go. In terms of let it run, if you are safe. Looking to pass 300k Apex evals. Would you trade news or commentary? Need 20k with 7k max DD. Simon, neither. So on the press conference as well, you can generally see very indecisive, unless there is a very, very clear tone and a very clear bias to what is being said. You can very often see price action like this. Powell might say, oh, this is looking good, this is good, growth is good, blah, blah, blah. And then he'll say, oh, but actually the labor market is struggling and we think it might need further attention. And then he could say, actually, on the other hand, inflation is rising, so we might have to hold off, or we might need to be a bit more cautious, whatever it may be. You can get, because he's talking, you don't know what's coming next, and neither does the market. So it could be something like that. In that case, it's very difficult to trade unless you are very, very quick and you've got no spreads and your executions are, within microseconds. Nick closed his silver trade. Crazy. I'm about to say that I saw Nick's silver trade, I think yesterday or the day before, I can't remember when. It's beautiful. It's the thing most traders dream of, having trades like that, because it looked like it had no drawdown as well. Oh, it's trailing stop. Fair enough. Oh yeah, I suppose actually if you had a trailing stop, I suppose this would have been a bit of an annoyance. Again, depending on where it was exactly, but yeah, frustrating. If that was what stopped him out on a trailing stop, that's sad. I can empathize. Just realized I've got about 2 minutes left, and then it should be Marco coming to take over the show. Mohammed bought gold already. Brave man. EuroCAD. I'm not going to do any chart analysis. I just don't have time for it. Again, we've got Marco coming up after me in a couple of minutes, or actually around 1 to 2 minutes. So I'm sure he can take some chart requests. Would you say you're looking for US 30 sells? No, I'm not looking for anything. I'm completely flat. I've got no opinions. I'm in no position right now to do anything. I can just sit, I can watch the decision, and then tomorrow, next week, whenever I'm ready, I can then come back and start looking for trades again. Why is NASDAQ selling but US 30 is not? I will be honest, I've got no idea. I've got absolutely no clue why the US 30 is rising and the NASDAQ's not. It could be, I don't know. I don't know enough about the equities markets or stock market to have a full understanding of what it could be. Earnings. I don't know if we're in earnings. I have really no clue, unfortunately. I'm sorry. Wealth trader. That makes me happy. I'm glad to hear that, my friend. Appreciate it. Who's Marco? Marco is a regular guest on the show. He is, I think he goes by the name Marco's Trading Journey right here. Well, I don't need to tell you because you'll be here in a minute or two. So you get to meet Marco. When is Nick coming? Oh, here you go. Nick is coming on for the rate decision. I think he'll be on for the rate decision and the press conference as well. Normally on these streams, Nick will sit and watch the press conference with you, and then maybe a discussion about what's been said and the implications and ramifications and the effects and all of those words on the markets. It will be a very, very good stream for anyone that's sat here now and you're like, oh, it's a couple of hours away, I don't know if I want to watch a stream that long. You absolutely should. Or even if you don't want to sit here that long, come back for the rate decision, because you will, even if you don't learn anything, which, if you're already understanding what's going on, you'll still be in an environment where there's lots of other traders talking about the same things we all love and care about, which is money in the markets. I need help, guys. I can't make it to FOMC meeting. I need to go to bed or react to market. I'm starting at Tesla. Do you recommend tomorrow I trade? I was staring at Tesla. Just go to bed. If you've got no trades open, you've got nothing to worry about. Just go to sleep. You should never feel obligated to try and trade. If you start feeling obligations and that need to be in the markets, that's when you should step away the most. Same thing goes for you, as I said earlier, the guy that's holding gold, pound dollar, euro dollar. Depends on the position itself. I would maybe trail stops, take partials, do whatever you think is right. Again, I don't know what risk you took. I don't know what your entries are. I don't know what your plan is. Really, really depends. Best option is to wait. Yes, exactly. If you gave me 10K, where would I put it? Depends what your time frame is, I guess. But if you were investing, for 10, 15 years, I would go. When I say I would go, I personally would do it, again, not financial advice, I would go into a small portion in the S&P, so maybe 10%, 20% in the S&P. I would put maybe another 10% aside for DCAing gold, just buying dips and accumulating a safe haven. And then I'd put some more in, maybe 20% in some active trading stocks. So things like Nvidia, whatever else, all those other things. And then I'd put maybe 55, 60% into a trading account. Hello, James. Sorry I came late to the live. Your expectation on gold. Yusuf, I'm not going to go over gold again because I've done it 2 or 3 times already, but we do have Marco coming up after me in a couple of minutes, or in a minute or so. So I'm sure he will do it with you, but you don't need to apologize for being late. I'm not sure if Marco's here because I can't see backstage. I will allow one of the A1 guys to message me when it's time for me to come off because I don't want to leave and then no one's here to take over. My opinion, US 30 today, no opinion, my friend, unfortunately. Seems buyers have stepped in heavily for New York session, but I really don't know. Dividend investing, to be honest, I don't like dividend investing. I did attempt it maybe 4 or 5 years ago, and I held it for about a year. It just wasn't worth it. The money that was allocated, I could have just made more doing my own thing. Anyway, ladies and gentlemen, my time is over. Marco is here to take over the show. Don't leave. Again, it's a long stream today, so stick around as long as you can. Make the most of it and get as much knowledge and value as you can. Guys, have a good one. See you later. Enjoy the rest of your days and stay safe.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello everyone, welcome to my segment of the stream. Let me just turn on the second light. Now we are ready. So big day today. We have the FOMC Fed interest rate decision, as you can see in the calendar. So if you have any questions, any chart requests, I have my chat open on the side, so definitely let me know. Yeah, basically we have the Fed meeting in, I think it's 2 hours. So we had CPI today for the pound, came in pretty much as expected. Then we had the Bank of Canada rate statement and the press conference. Let me sum it up for you because I did do some research and I do have 2 positions. I have a USD CAD long, I have a Euro CAD long as well. So I'm very, very short on the Canadian dollar, and we had a rate cut. So that is bearish for the currency, or should be bearish for the currency, from 2.75 to 2.5. But actually, during the press conference, the central bankers mentioned that they are not really considering new rate cuts, that they are not also considering quantitative easing, which should be kind of bearish for the CAD. So they are watching the situation, and they don't want to accept, or they don't want to admit, or they don't want to alert people of these numbers. Let me tell you which numbers I'm talking about. They did mention a bit about it, but not much. So GDP is bad. Unemployment rate is horrible. It's in an uptrend. Inflation is around 2%. So not a lot of room for inflation to go up if you want to keep it at a target rate. So for the CAD, see, CAD, yeah, 1.9. So pretty bad situation for the CAD. The central bank has not yet acknowledge the situation. We didn't have the future projections. What I like the most with them, 32 comments. Okay, you're pretty busy today. So what I like the most about interest rate decisions and press conferences is future projections. Now, usually future projections come out 4 times per year. This was not one of them. So for the CAD, for the Bank of Canada, future projections will come out in October. We had them in July. Next print is in October. I'm going to be watching closely for that. How are my positions doing? Well, I did have a USD CAD long, which is now in some pretty massive drawdown. It is possibly respecting a trend line here, kind of acting as dynamic support. The dollar had a lot of weakness lately. Now it's bouncing off. I am a bit worried. Fed meeting today, we could get a lot of volatility. We could get this, and then just all over the place price action. I'm holding the position. So let's see what happens. Let's stick to the plan. Let's stick to the initial stop loss, and hopefully this does go up. Now, about the meeting today, there's a lot of questions. So sorry, I have the second position, which is Euro CAD. Now I like this one as well. Euro, I'm pretty bullish on. If you check the EdgeFinder, Europe's economy is doing pretty well. So Europe's economy is doing some pretty healthy numbers. Well, the CAD, as I just showed you, is in major trouble. Also, look at the housing prices for Canada. I have put in all of this data in the A1 Discord. So if you want to get access to all of this data, to all of this analysis, to all of these graphs, make sure to join the A1 Discord using the link found in the description of the stream. You can use my discount code, which is MARKO. So this discount code works both for the EdgeFinder and for the A1 Discord for my trade signals, Nick's trade signals, Chris Pulver, iWind, and a lot of other quality traders are in there. So I highly urge you to check it out. And I'm going to let these positions run. So EuroCAD I took yesterday. This is a new position. I have the stop loss below this swing low. I'm planning to be in this position for 1 month, 2 months, 3 months. So quite a lot of long time. I like the overall uptrend, and I really like the fundamentals. If we check the top setups, you can see that for EuroCAD, we are bullish. EuroCAD bullish, okay? And I have another trade idea that I want to execute. That would be the Aussie CAD. Aussie CAD I really like. Why do I like it? Because of positive swaps. So for EuroCAD, I'm paying negative swaps. So it's going to be expensive to hold the trade, but I do think it's worth it. For the Aussie CAD, I'm getting paid positive swaps. So I would definitely like to get in this position and be in the trade for a couple of months. I definitely would not mind collecting those swaps. Aussie, fundamentally bullish. If we check the top setups, let's see. Not the top setups, but the economic heat map. Pretty nice latest numbers. Long-term numbers are bullish as well. CAD, as I mentioned, is bearish. So fundamentals are good. Technical analysis looks to be very strong and an uptrend. I just don't want to buy at this level. I think we are a bit overextended. So I have an alert set. And I think if we pull back a little bit more, if we touch the 20 MA, it's going to be a really good opportunity to get in on a buy setup and to work on this trade idea. So if we do reach these levels, I'm going to be looking for a buy entry, and I think we can hit the highs. So I think you can have a pretty healthy reward to risk like this, aiming for the highs, 2-to-1, something like that. I really like this trade, and this is going to be my next trade idea, most likely, if we do pull back. If we fly away without me, then it is what it is. So that is my game plan for the CAD. I'm stacking long positions. I'm long USD CAD. I'm long Euro CAD. I want to be long Aussie CAD. It's not massive risk because they're pretty correlated. So it's not massive risk, but overall, if you combine all 3 positions, it can be a pretty substantial amount of risk and a pretty substantial amount of gain if the positions do work out. So, Fed meeting today, what did I want to go through? Well, I did this analysis in the A1 Discord, but there is a couple of scenarios that could happen. So pretty much we're going to get a rate cut. That is now definite. So from 4.5 to 4.25. Now the question is, what will Powell say? Or will the rate cut be bigger? So some people are calling for a 50 basis points cut. I don't think that will happen. I think a 25 basis points is much more likely, much more high probability to happen. If we get a 50 basis points, then that is pretty bearish for the DXY, especially if Powell is going to sound dovish, meaning he announces more rate cuts. Whoa, the DXY dropped heavily yesterday. So if we get a 25 basis point cut plus a hawkish Powell, which could happen, so they could cut, but then Powell can come out and say, look, we made a cut, but we are concerned about inflation, so we're kind of thinking about the future. We are not sure if we will cut aggressively. That, in my opinion, will produce some upside for the DXY. If we get a 25 basis point cut and a dovish Powell, meaning more rate cuts, aggressive cuts, jobs market is in the dumps, we're going to save it, we're going to cut like crazy, well, the DXY could go lower. I don't think a lot lower, but a bit lower. So it's not so much about the number that comes out, it is about the press conference. So it's not so much about this event, because I think it's going to come out as forecasted. It is about the press conference. Okay, so watch for the press conference, watch for the statement as well. I think Nick is going to be live streaming during the press conference. I'm not 100% sure. That is going to be the most important part. So what is the tone of Powell? Is he concerned about inflation, or is he concerned about the jobs market? Is he dovish? Is he hawkish? What about the tariffs? He's most likely going to mention the tariffs. Were tariffs a one-time thing, or will tariffs have a continued impact onto the markets? So, of course, post-analysis, we're going to write it up in the Discord. Make sure you check out the A1 Discord for the updates. Should be pretty fun. Should be pretty entertaining. Let me run through the comments. Oh, there's quite a lot of comments. Okay. Hello to everyone, because there's quite a lot of names. Let me see what you guys want to see the most. Well, USD yen looks to be very prominent. Yeah, USD yen. You really want to see USD yen. Let me see. Gold. Yeah, I'm going to run through my personal watch list. So let's do USD yen, and then let me run through my watch list. Hey, Luca, what's up? So USD yen, USDJPY. It is now very close to this support level. Very, very close to the support level. Trying to pierce through it. There's been this pesky buyer at 146 let's say 0.2, 0.3. And this level has been holding for weeks. So we just cannot seem to break this level. I'm looking for shorts. I'm actually slightly neutral, slightly bearish to neutral on the dollar, but I'm really bullish on the yen because possible rate hikes in the future. So if the Fed cuts rates, well, the Bank of Japan raises rates. We have a meeting this Friday. I think it's going to happen. It is tentative, but I do think it's going to happen. So if the Fed cuts rates and continues to cut rates while Bank of Japan raises interest rates, that should make UJ go down. Now, before looking for shorts, I want to see a clean break of the lows. So I want to see this clean break of the lows, because this level has been really strong. So we can easily pierce through it a bit and then retrace back into this range. One more thing why I'm afraid to be short is the swaps. If you go to the carry trade scanner, and if you put in USDJPY, look at this. Look at the difference in the interest rate. it is massive. So if you check your swaps on your MetaTrader or whichever platform you are using, you're going to see that for going short on UJ, you will be paying a small fortune. So that's another concern of mine. If everything else fits my plan, would I want to collect so many negative swaps or pay so much negative swaps? Not sure. All of the updates you will get in the Discord. So let's first see if we can break this level. I think with the volatility from the Fed today, most likely we're going to break this level. The question is, will we break below and retrace, right? So will we actually go back into the range? So that is the main question for today. Now, I wanted to run through my watch list. Everything is red for today except USD CAD. Pretty much NASDAQ is pulling back a bit. It's a really minimal pullback. I'm looking for buy setups, but at some lower levels. So I don't want to sound like a broken record. If you have been watching me on my last streams, I've been trying to get in on a pullback. We are just not getting that pullback. I'm bullish. I want to get in, but I need to see a pullback first. I think we are a bit overextended here, and I don't want to buy the all-time highs. Now, for gold and silver, silver today was pretty interesting. We had a really big red candle, around 3% loss on the day. Now it retraced. Gold seems to be kind of flat on the day. Long term, I'm very bullish. My favorite assets right now is gold and silver. I wanted to get in the consolidation period. I just didn't get an opportunity. I was too slow. So I wanted to get in here and here, but I was too slow. It is what it is. I'm going to try to get in on another buy setup, but I need to see a pullback first. Pretty much same scenario as for the NASDAQ. So we are at all-time highs. We are kind of overextended. Everyone is buying at these levels. Soon, the amount of buyers will run out. You will only have sellers. So you will get a pullback eventually. I just don't know when. Am I going short? Absolutely not. So I'm not crazy to go short in this market because it's so impulsive. But again, I want to see a pullback. Where to? Well, possibly to this level of support, possibly to the 20 MA, definitely to this level of support and maybe the 20 MA. Again, we started to pull back. I would like to see this commit a bit more, pull back a bit more. So very interesting. And just if you look at the fundamentals, what is currently happening in the markets, you have inflation. So let me tell you, if you look at inflation CPI for the US dollar, rising inflation above target. Look at the labor market. Look at NFP going down. It's in a downtrend. So all of that is telling you, what's the unemployment? Let's check that for the USD. I think it's pretty stagnant. It's pretty flat, kind of rising a little bit. But all of the numbers are pointing to higher gold, are pointing to higher inflation. Then you have the commercial banks. They have started to print money again. Okay, they have heavily started to print money again in 2025, meaning higher inflation. Next year, you have the big, beautiful bill from Trump. What is the bill going to do? It is going to increase the US debt. It is going to increase the government spending. It is going to increase inflation. So right now, this is such a good story. You have every single catalyst that you can have for gold and silver to go up. That's why I think this train is just going to continue going up, but hopefully we do get a pullback. Euro dollar was a trade that hit the take profit, so I'm not gonna go through this again. I talked about it in the stream yesterday, and the CAD positions. So Aussie CAD I mentioned. So Aussie CAD I mentioned. I was looking for a pullback to this level of support, and then I would definitely be looking for buy setups. So I really like Aussie CAD. Euro GBP is had a big push up yesterday. Now it's down on the day. It is retracing, so it doesn't look so healthy. To be honest, I want to get out. Will I get out now? No, I'll leave it to run a bit more. it has just become this flat and stagnant price action, and I'm collecting negative swaps, which I definitely don't like. So I'm gonna let it run a bit more, but I have a take profit set at the highs. Maybe I can get out. If I can, that would be a good day. So I no longer like this position as much. The reaction was pretty flat. The reaction was pretty minimal, and yeah, leaving this one alone. Now, before I go for the comments, I want to talk to you guys about the sponsor of today's stream, which is going to be DNA Funded. So if you're looking for a prop firm, if you want to expand your prop firm capital or general capital, I highly recommend you guys check out DNA Funded. So I have this account that is testing my ChatGPT signals strategy, where I'm basically following what ChatGPT tells me to buy or sell. It has made 23% in the last 90 days, so the performance has been pretty good. And currently I have a trade running on EuroGBP sell in some profit, but I'm down on the account because I took a loss yesterday. So yeah, if you want to get a funded challenge, make sure to use our discount code, which is A1Live, and you can get 25% off of the challenge. This is just for the stream viewers. So this is an exclusive discount for stream viewers. A1Live gets you 25% off. Let's get back to it. So let me run through the comments. Let's see. So covered gold. We have a guy that has been banned. Okay. Any VIX calls? No, I don't trade options. I don't have enough capital to trade options, so I'm focusing on just pure CFDs and prop firms, because then I can expand my capital. Bro. Let's see. So Luca asks, is this live saved on the channel? Yes, this live, after it's done, is saved on the Trader Nick channel, so you can watch the recording. So Ibrahim says, I copied your trade in EuroCAD. Well, great. If you copied the idea, but of course, it's not investment advice. It is just an idea. And it's not only a trade signal. It is more to teach you how we think, how we structure a trade, and how we actually execute a trade. So it's not our main goal to make your account grow. It is actually to teach you to trade and to apply our thinking, our analysis for your own trading and create your own strategies. So that's why we have so much bullet points in a signal. So it's not about the signal, it is about all of the bullet points, all of the reasons why we took a trade. So let us continue. Well, gold I already covered. I see a lot of people want to see gold. Basically, if you have joined right now, I'm really bullish. I want to buy, but I don't want to get in at these levels. Okay, I think we are a bit overextended at these levels, so I am being patient. As far as all of the indices go, we have the Nasdaq, S&P, US 30, Russell. If we get rate cuts, Russell should benefit the most, because Russell is full of unprofitable companies that like cheap money, that like cheap loans. So if loans get cheaper, unprofitable companies take out more loans, they inflate the stock price, they inflate the Russell. So Russell should benefit the most. But right now, I have pretty much the same opinion on every single index, and that is we are a bit overextended, and I'm looking for pullbacks. My favorite is going to be the Nasdaq because of the artificial intelligence story, and artificial intelligence basically pumping the prices higher. So much spending, so much investment into AI. And this is kind of the new bubble. The new tech bubble is going to be artificial intelligence. Until the bubble bursts, I will be buying all the way to the top. So, yeah. There's a question, how does US inflation affect the DXY? Well, you have to note that right now the Fed doesn't really care about inflation. Okay, right now the Fed doesn't really care about inflation, so it could go both ways. What the Fed really cares about is the jobs numbers. At least that is what Powell communicated. And you have to ask yourself, we have been above the inflation target for a long, long time. So if you look at CPI for the US, it has been above target for the last, let's see, the last 3 years of data. The last 3 years of data, it's just been above the 2% target. So does the target even matter? What is the target? Is it 2%? Is it 3%? I don't think it matters anymore. I think what matters is NFP. I think what the Fed wants to do is they want to grow their way out of, let's say, a high inflation. So they want to stimulate the jobs market. They want to stimulate the GDP. That is their main aim. Again, we will get more clarity today. So we will get more clarity during the Powell press conference. But I'm talking about what he mentioned at Jackson Hole. So in his last speech, he didn't really care about inflation. He talked about the jobs market. He signaled possible rate cuts. That is what people are looking at. And you have to know that if you cut rates, inflation could go up. So Fed Watch Tool, we have 3 rate cuts, 1.5 hours to go, but we have 3 rate cuts scheduled for 2025. That's quite a large amount. So we will see what will happen, but they definitely are focusing on the jobs market. What is my forecast for the DXY? I believe we're not going to go much lower than 96.4. We could pierce through it, but I don't think we're going to melt. Look what happened in 2025. Massive sell-off in the DXY. What was the catalyst? Everything has a catalyst. Everything has a reason. Well, it was Trump, tariffs, crazy tweets, uncertainty. That is why this sold off. So a lot of hedge funds, pension funds, big, let's say, players, big investors were selling their dollars to reduce their exposure to the United States. Well, that's done. More certainty has now been achieved. Tariffs are no longer in the spotlight. Tariffs are no longer the main story. Trump has calmed down a little bit. There's not a huge amount of crazy tweets lately. So it has become a bit flat. And I'm not sure what would be the massive catalyst to push the DXY lower to, let's say, 90, or you can say to 92. You need a massive catalyst, and currently there is none. So yes, we do have the Fed rate cut story, but that doesn't mean that we must sell off like crazy, And a lot of people are calling for a lower dollar. When a lot of retail traders are calling for a lower DXY, the opposite happens. So I actually think what I would also like to see is sort of a hawkish cut today. So cut of 25 basis points, but then Powell says, look, inflation is still high. We're not sure about the future rate cuts. We're going to have to wait and see. We're going to have to rely on more data. And that could make the DXY be flat or maybe even go up a bit. So that is at least my forecast. I don't see the DXY just selling off like crazy. I don't think that that will happen. So let me quickly check the comments for any last minute requests. AA Gaming says, I will join Zentum Trading. Well, thank you very much. If you guys want to learn to trade, I do have a trading community that I personally run. So go to my YouTube channel, check it out if you want. But I also urge you to check out the A1 Trading show as well, or the A1 Trading channel, Discord channel, I mean. And you can use my discount code, which is MARKO. So gold still very bullish. Okay. DXY, yeah, we just covered the DXY, so that should be done. Hawkish cut. I think that would be pretty. I think the highest probability is for a hawkish cut, and it would be interesting. What just happened to copper? Let's see. Copper. Well, I'm not closely following copper. Did something drastic happen by the size of the candle? I wouldn't say so. This is a drastic move. This is a drastic move. This is a drastic move. But this daily candle is not really drastic. So I can't help you much. Copper is not my main focus. I'm not proficient in trading copper in terms of fundamentals. And I just think it's a chop fest. And it's definitely highly impacted by geopolitics. Same as US oil, chop fest and highly impacted by geopolitics. I much rather would monitor gold, silver, NASDAQ, euro dollar, which has been in a nice steady uptrend, and stuff that fits my personality and that fits my trading style. Okay, so that is my main focus. I try to limit myself at least a little bit. I don't want to trade everything under the sun because I don't want to go into things that I don't know. So if I learn about it, then I can trade it. But so far, platinum, copper, and US oil are just not on my radar. Crypto is, but crypto has been pretty range bound and choppy. So not really a lot to say about crypto. And that wraps up my segment. So takeaway from the stream, watch out for the Fed today. My best play is buying gold, buying silver, selling the CAD. That is my favorite play for today and for this week. I think we're going to get a hawkish cut, which should mean DXY goes flat or maybe even goes up. And yeah, let's see what happens. So have a great rest of the day, and I will see you tomorrow. I'm pretty much streaming every single day on the A1 stream, and you can catch me every single day. So yeah, good luck and see you in the next one.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Hey everybody, welcome back. 12:30 p.m. Take a look here at gold. So I'm going to put in some alerts for Pulver alerts, and I just put this in my account. What I'm going to do is just put another dollar cost average level in, and there's going to be a few of them. So I'm going to use GLD, SLV. I'm going to look to buy the 50 period, the 100 period, the 144, and the 200, all with small trades. Allocation, this is the dollar cost averaging that I'm looking to get my portfolio allocation up to, I think between gold, silver, and Bitcoin, I'm looking to be at about 40% of my portfolio. I know that seems high, but look, I can work a lot of options just trading something simple like an index like SPY or QQQ. So I'm going to have a little segment here on just some portfolio allocation. I'm looking at a mix of probably, let me go back here. I'd say maybe 50 to 60%. I'm going to go 50%. So 50% in equities and indexes. Okay, now that's a mix. I mean, I'm getting a nice run. I've got all-time highs in the portfolio for the year today. A big push on that has come from Chinese plays with Alibaba and Baidu. If you're holding the shares with me, I know I put this on Pulver alerts a while back. We've been in China stuff, Alibaba, Baidu, FXI, KWeb since last fall. Here we are a year later, and we're seeing triple-digit winners on these runs. So I like the mix of I trade the SPY, the Qs, the DIA, the Russell. This year, I know that Nick and I are going to have a segment in November talking through kind of the rest of the year, 2025, end of the year, 2026 predictions. This is going to be a mix of, I'd say, SPY, QQQ, DIA, IWM, and individual stocks. Okay. And then I want to figure out what mix I'm comfortable with, but I would say probably gold, silver of another 50% chunk. I would be willing to go up to about 25%. something like that. So 25% gold and silver. And that could be a mix of GLD, SLV, /GC, and /SI for futures. And then the other 25% Bitcoin. For me, that is, my, Coldbase, that's my Coinbase wallet, my Ledger wallet, also just something as simple as IBIT, FBTC. If you want to trade and hold in an equities portfolio like the ETFs. So IBIT is the BlackRock, FBTC is the Fidelity. I think this is a pretty good mix. I'm going to talk a lot about this in November. That way it doesn't have to be super complicated, and there's always room to dollar cost average. I would say of this mix, I don't want to be 100% invested. Okay, but likely I would say about 75% invested and 25% cash for dry powder. Okay, and I vary. I mean, when I'm highly convicted, when I've got high conviction for my trades, I'm probably going after 75 to 80% invested, in using that 25% cash to have puts and have protection, have hedges. But right now I'm sitting around 50% invested, 50% cash, and I've been waiting for some of these dips to show up. So anyway, we'll talk more about this in November, but I have some good trades running right now. I'm going to put in some trades on, I'm going to post this actually right now for Pulver alerts. So inside Pulver alerts, we're going to go into stocks, options trades, excuse me, stocks, options trades, or commodity trades. Let's see here. Technically, it's going to be a stock option because it's GLD and SLV, so I'll do this. I'm going to post one thing. So it's going to be a new trade for Pulver alerts. New trade, GLD and SLV, dollar cost averaging for adding exposure and allocation to gold and silver. Right? And I had this discussion this morning. Somebody asked me, well, Chris, why don't you just do a leap? Meaning like I buy a 1 year, 2 year call on GLD. Well, that's fine. But if I'm wrong directionally, or if all of a sudden we go into a sideways range in gold and silver, I'm going to lose money on that option. So if anything, I'd rather just put in buy limit orders and have price come down and hit the levels that I want. Same thing on SLV, GLD. So this is what I'm going to do. So I'm going to go GLD, buy levels. I already have ownership of both. So I own shares of GLD. I'm still going to hold it. I own shares of SLV. I'm still going to hold it, but I'm looking to add to my exposure. GLD, if we hit, I'm going to go I'll say 319 right now. I'll just go 320. So 320 and another push down to about 310. Another push down to 300. And below the 200 moving average is about 290. And then all the way down here towards the previous highs at 260. Okay, SLV buy levels. Now, I'll explain this dollar cost averaging stuff because I don't want to take huge positions. This isn't 100 shares, 100 shares, 100 shares, 100 shares. That's way too big. For me, if I have it in this like pie chart, if I could allocate, $5,000, well, I've got 1, 2, 3, 4, 5 levels. I'll put $1,000 in each level, allocate $5,000 to GLD, add that exposure into the mix. Make sense? So you can choose. I mean, the nice thing is if you only have $500 to add or $1,000 to add, then just buy the appropriate shares. Okay, so I'm going to go SLV. SLV, I think we pull back to 36. So put in a buy level at 36. And that would be right around the previous high as well as this 50-day moving average. And then we go down to 34. And that's around the 100 moving average. The 200 is 32. And if we go below that, I would buy more around 28.50. And that's 4 positions. So total dollar cost averaging. And again, maybe price goes higher. I'm hoping that silver pulls back before we run to all-time highs. So I'm holding my silver exposure to hit all-time highs, which SLV is around 44.06. That would be gold hitting around $49 as far as the spot price goes. Gold is already at all-time highs, so I don't really have a measure move on gold outside of central banks are buying it, institutions are hoarding it. I listened to a really interesting podcast yesterday on just how much institutional and government like demand is there in gold, and yet nobody is talking about it. So I just think it's an important allocation to have. I think it's I know we're at all-time highs, but I think that we're still in maybe the early innings of what could be a big move towards gold, silver. This podcast made a pretty interesting discussion where this particular gentleman said that gold will be on a fortium and silver will be unobtainium. What he meant was gold prices could be so high and so ballistic that like don't stop allocating, don't stop buying, don't stop dollar cost averaging, because we could go on, who knows, it could be like silly how much gold prices could be, per ounce in the coming years, unless there's like a massive, financial reset. And there's a weird way to kind of allow governments to kind of borrow at zero cost because we're hoarding gold. And you can almost have like this fiscal or fiat reset, but also having gold as a collateral, right? Silver being unobtainium because it's going to be harder and harder to get. Demand is going to be increasingly high. The gold and silver ratio will continue to be a real thing, but it's going to be so unaffordable to have gold that silver is the next best thing. And it becomes not only an industrial metal, but also a strategic metal. And that essentially puts in floors and demands and, weekly and monthly flows into gold and silver both. So I like both of them. I don't think it's going to be a full-in portfolio. Obviously, I want to have some equity exposure. I want to trade options. But I also want to have a decent chunk and mix of silver and gold. If you're not too keen on Bitcoin, then maybe you can up that silver and gold to 40, 50% and have zero Bitcoin. I still like Bitcoin for what it is as far as, betting on AI, the market cap growing. Bitcoin market cap is like 2 trillion. I think if you're taking, I mean, the bond market's what, $40 trillion? You take 10% of the bond market and divvy it up between gold, silver, Bitcoin. I think there's another $1 trillion to $2 trillion on Bitcoin that gets added in market cap. So I can see Bitcoin doubling. I can see Bitcoin from, 120 to 240. This discussion of having Bitcoin go to $1 million+ Again, it's pure speculation. It's pure risk capital. But I think these are important allocations to consider moving into 2026 and onwards, because, betting on the Mag 7 forevermore, I don't think is going to be the play over the next couple of years. I think that we've had a runway of, 15 years of these stocks becoming just adding up to $1 trillion+ market cap. Now there's over like $15 trillion just in Mag 7 alone. It's insane how big these companies are. And it's also insane the concentration risk that they pose if they don't keep performing at a high level. So I think it's important. All right. Anyway, that's my gold and silver rant. I'm putting this in new trade, GLD and SLV, dollar cost averaging, add exposure, allocation, gold and silver, buy levels. And I'll add in here. I'm taking $1,000 bites at each level. So it's going to be a GLD 5K total allocation, and SLV 4K total allocation to add to my core positions. And these are all pullback levels on the chart. Okay. So issuing this official alert, posted in Pulver alerts right now. So I posted this under stocks, options, trades in my thread. So if you go to stocks, options, trades under the Chris Pulver trades, you'll see that DCA for GLD and SLV. So DCA meaning dollar cost averaging. Okay. All right. So if you have the A1 Discord and you have my Pulver alerts, you'll see it under stocks, options, trades. Cool. All right. Let's go top down. Markets are down slightly. Futures were down, 0% at the open. We've leaked a little bit lower, 0.2%. We have FOMC coming up. We're at 65.90, pretty good gamma level this morning. I'm sitting on a trade at 65.55 on a put side. I've been letting this run all morning. I'm down about $15 to $20. I'm making a decision that I will not hold this trade into FOMC. I think this is a silly trade to have into FOMC. What I'm hoping for is there is enough time that has passed. I mean, the reality is I might not see any profit on this trade today, and that would be frustrating because mechanically it's a good trade. You know, the put side is 66.55. The call side's at the put side 65.55. The call side 66.55. That's 100 wide, and price today in the S&P has only moved about 15 to 20 points. So we opened up today around 66.04. We're trading at 66.90. We've only moved 14 points. I'm 50 points higher or lower, and I haven't had enough time decay, which I put quotes around that because the reason why is all of the volatility today is focused on 2 p.m. afterwards. All the drama, all the volatility, all the movement, all the flows are going to be this afternoon from 2 p.m. to 4. All right. So realistically, I might end up taking a very small loss on this trade. That's fine. But I will, hopefully see, when the price settles and the dust settles, we'll either have some gains to show for it. I'm at fresh highs again for the year. Let's see if we can cling to these. I also closed out profit today on Lyft. So this should have been also in the Pulver alerts. I have 100 shares at 11.79. I closed it out today. I'm adding this into Pulver alerts as well. We're trading at 22.82. I'm closing shares of Lyft. Okay. So I'm going to jump to that one right here, make an update on Lyft. I'll just reply to this thread. So trade management, closing shares of Lyft for profit. I bought shares at 11.79, closing at 22.85 or higher. I closed at 23.0 to 23.10 this morning. Okay, I considered, I'm just typing this into Pulver alerts here. I considered adding an in the money covered call. Covered call for Friday, but wasn't too thrilled at literally making $0 more. So nice run. I'll take the profit. Note, if you want to add a trailing stop loss, let me look at the price here on Lyft. Go to the daily time frame really quickly. I mean, the reason I'm closing is I saw this big liquidity level at 22. I just don't, I think with this gap here back to 20.50, I'm just going to close it. We've had a big move on the day. This is well above an ATR. We're up to 23 and change. I closed it out at 23.10. I just think it's a good time to close it. We look back in this chart, you're going to see a big gap as well. So this candle is a large gap. Okay. So I could see Lyft, going into, now that we're breaking these highs, I wouldn't be surprised to see price going higher. So if you want to hang on to the stock, this is a long trough that's been building for a while. We're finally starting to break resistance here above the 20 handle. There's room to get back to $30. So if you want to hang on to this, I think $30 is pretty reasonable. You go from a big fib. Let's take a Fibonacci here from high to low. So if we go from high to low, something like that. I mean, even pulling back 38%. I mean, that's not unreasonable to think we can get back to, let me drag this down here. There. So even pulling back to this pocket, this gap, $31. If you want to hang on to it, I think that's a good profit target if you're willing to hang on to it for another, $9. But I'm not taking my chances. I bought this thing at 11 and change, pretty much near the lows. We got a nice pop to the upside. This gap is starting to fill, and so I'm just taking the profit. If I wanted to add covered calls, I could. If you're familiar with just adding covered calls, taking options, and trying to lower the cost basis. But if this is going to run higher, if you're going to put in a trailing stop loss, I would say if you want to add a trailing stop loss, 18.50 below the weekly candle gives us room to run, but your sacrificing current profits. However, the $30 price target is still reasonable. Okay, so I'll send that out to everybody. All right, so updating Lyft. All right, so we can make a run into, you know, $30 to $31 if you want to hang on to it. Stop loss below this weekly candle as we're starting to gain some traction here. This is now, what, 5 weeks out of 6 that have been pretty bullish. So it stays out of the way, lets the market have a little bit of noise. We're probably going to pull back into this gap. So if you put the stop loss too tight, I think you're going to choke off some of the gains. If you go below this 1850 zone, you know, we can still just kind of come back and find this pocket, use this breakout point to find resistance, still offer support. Maybe it's a bull flag and the price continues to run higher. So not a bad trade. So there's 5 minutes there, and SPX. Now we're at 65.93. I'm going to print this on the other screen. So by the time we roll into FOMC at 2 p.m. Eastern time, I'm hoping that this trade is in some profit. So I'm down about 15 to 20 bucks. I might just have to take a small loss today. That shows here, based on my metrics, based on my my options chain, the plus minus on the day, it shows a 95% chance of profit on the trade. That's good. The issue is if we have a lot of volatility that's about to hit in the next hour and 8 minutes, this trade is fully at risk. So, you know, I have a $1.50 credit. I'm only risking $3.50 on the trade. If price finishes in between 66.55 and 65.55, I can still make a $1.50 on the trade. However, I don't know what price is going to do, just like nobody else knows what price is going to do. Are we going to see a big noisy day in FOMC? It's very possible, right? Are we going to see a big dump to the downside? It's very possible. We're going to see a big rip to the upside. Anything's possible today. So, you know, again, I want to make sure that whatever I have going is defined risk. And, you know, if I wanted to take the risk all day, I can. But I will say this, that trade, if it is positive going into the 2 p.m. FOMC, I'm probably going to close out for a couple bucks profit. And we'll see. It's going to be, if I take a $20 loss, it's okay. I can look back in hindsight and say, oh, I could have, should have, would have won, but I've got to embrace the $350 risk to do that. And, you know, it's not a bad thing. I just think it's time for this market to give a little bit of a shakeout. I don't know if it's going to be today. It may be not, it maybe isn't today. But I do think that the historical significance of September, Nick and I talked about this yesterday. The second half of September is usually the weakest. In fact, the final 10 days of trading in September are usually the weakest. So the 10-year average of September being a weaker bearish month, a lot of it comes on the back half of the month. We're at the halfway point, right? So we have the second half of the month that this thing turns over. I mentioned this yesterday in my YouTube session. I do have a lot of short-term risk to the upside. I've taken a lot of broken wing butterflies, and those trades are pretty good for, you know, $100, $110, $120 of credit. I think the probability of profit's pretty high. I think the market, you know, has what it takes to at least pull back to the 21 period or the 50 period, possibly deeper. But I'm very curious how price action plays out today with Powell's press conference. You know, if this is considered or taken in as a hawkish cut, I don't think the Fed is going to cut and then immediately push back and say, well, we're just going to cut now, or we're going to wait for data dependency. It's pretty clear that the labor market is struggling. It's pretty clear that right now, this administration with immigration policy, we're not going to see 100 to 2,000 jobs every non-farm payroll. We're probably going to see 50K or 25K or less. We might actually see negative prints in jobs, right? Which is going to be super concerning, as well as seeing higher inflation. And again, I told everyone this last week, the news of stagflation, right? Jobs are struggling, higher inflation, slower growth, stagflation. That's the headline, but it's not really the backdrop. What's really happening is companies are moving and pivoting and positioning for this AI expansion and this boom. AI is this giant blanket that incorporates pretty much every way for a company to be more lean, more mean, have higher profit margins, do more with less. And the build out for AI is pretty much the focus over the next 2, 3, 4, 5 years. I think what's going to ultimately need to be required to have this boom for AI and this build out with data centers and embodiment of AI is we have to have the energy to do it. So I have added trades this last week in XOP and XOM and XLE. These are all in my Pulver alerts as well. Okay. So I'm adding some diversification to my portfolio. That would be in my mix of, stocks, indexes, equities, sectors count as well. But I think energy is a good mix to have. It's also one of the more undervalued sectors. So I think energy is a pretty good play to, we need it. I mean, I'm sure if you've been paying attention, your electricity bill's probably gone up at your home. Residential electricity prices are going higher. And they might continue to go higher just so we can build out something fun on AI and ChatGPT. Funny story. My sister came into town this last weekend and we went to this amusement park that I live by. And we did this like scary show. It was a little like seance show. And I was terrified. I hate this stuff. I'm not like a Halloween or horror person, but we went into this show anyway. I just used ChatGPT to render image of it. So I'll show you the picture of it. I created this in 5 minutes with ChatGPT today. Okay. So basically my fiance is in the middle laughing because she loves this stuff. And I don't understand how she can just take this in stride. I'm terrified. I literally closed my eyes like probably 10 minutes into the show and didn't open them until the end. And then my sister's just pointing and screaming at everything. It was really creepy. It was like, put yourself into like the Blair Witch Project or, Paranormal Activity, something like that. It's creepy. Anyway, I didn't see it. There's, as I say in Scary Things, it's like there's some things you can't unsee. So I was just fine with my eyes closed. Anyway, in 5 minutes, I rendered this in ChatGPT. The amount of computing power that it takes to do this is probably insane, right? And, me along with everyone else is doing little renderings here and making memes and making videos. The amount of computer power to do this stuff is crazy. So is this what the AI future is? I don't think so. I think there's a lot more to it, but obviously there's like the novelty of what we can do on a day-to-day basis. Like, if I had to creatively draw this myself, I wouldn't have come up with this in 5 minutes. It would take me a lot longer. I'm certainly not that good of an artist. So anyway, just saying, like, build outs, we need the energy to allow for this data center, this computing power to grow. And if we bottleneck ourselves, we're going to see a struggle across the board. And again, fiscal dominance is here to stay through the Trump administration. If Trump stays in power through the midterm and it's still a Republican majority, this agenda will continue to persist. And this agenda is all about growth, letting inflation run a little bit higher, a little bit hotter, global PMI is going up. What we're going to find out this week is all about yields, okay? Does the 10-year yield do something different? Okay, if the Fed is going to be cutting 150 basis points over the next year and a half, let's go out to the probabilities for the end of the year, 2026. 1, 2, 3, 4, 5, 6 cuts. That is a projection at 50 basis points each. If Powell gives a hint at that and says this is about the pace that we're seeing, then has it all been priced in? Right? Or is this a hawkish cut where they're still going to talk about jobs and labor? I have no idea, right? I don't know. And honestly, what Powell says and what price action does could be two very different things. Okay? So point is, what I'm looking at for the bond market, for the yield market, is the Fed cannot control the long end of the curve. It can't, and it doesn't, and it won't. And the short end of the curve is what they can control, which is what we're going to be cutting, right? We're going to cut the short end of the curve. But with global PMIs rallying and inflation going higher and global yields rallying, I just don't know if this ends up going back up, right? Does this end up going higher? Do global yields go higher? Just like we had last, I don't know why my drawing tool is not working right now. Like we had last September, when the Fed started to cut by 100 basis points, this did the exact opposite. So as we are right here about to cut rates, are we about to see the 10-year rally, or is this going to continue to push lower? I don't know, but I think that is there's trillions of dollars on the line for this debt restructuring for how this plays out, especially here in the US. Okay, so I just want you to consider this is one chart that's important to watch. It's not a make or break. I think the market continues to do what it does best. This whole idea of ending in a disaster. Look, man, you got to give the market credit for what it's good at. This market is, look, the entire global economy rests on financializing our markets, meaning you have to see them go higher. The U.S. cannot afford to go into recession. If the U.S. goes into recession, it's going to take the whole world with it. And so this idea of, doom and gloom, the world is ending, Ray Dalio, change your world order. Look, the amount of creative control and the amount of tools and resources that the U.S. has to basically thwart off any type of recession is probably bigger than you can ever imagine. So it's all going to end badly, but I think there's also like, there's always an audible, there's always a pivot. There's also like, there's a loophole. There's a needle that can be thread through this stuff. I think if you've been trading for, 10 years, 20 years, or the markets have been open for 90 years, what have they continued to do? Yes, there's disastrous times. Yes, there's bear markets, but they find a way through them. And so what we have to do is make sure we're not fully exposed as bag holders at the top of something. Okay. Is this the time that the market rolls over? Okay. Let's say the market rolls over to where? If we have a pullback, we pull back maybe 10%, right? If the pullback gets wilder and nastier and okay, what, 15%? We take back some of the gains. Look, we're up 37% from these lows. The posture is still bullish. If the market's going to take out, let's say 5,700, maybe I question the integrity. But you look back further on this chart, you go to the weekly time frame, there is key support all the way back here to COVID, all the way back here to 2022, all the way back here to the freaking pip, to the dollar, to the tick at the 2025 low. So there's still a technical level and there's still automatic buyers in these markets. So it is in the global economy's best interest to keep this freaking party going. And that is something that you have to embrace. You're not trading rational. This is a market that is gamified and has to go higher. If we're going to have any growth, any progress, the markets have to go higher. Okay. We are in a pro-growth agenda. We are in a fiscal dominance policy regime right now that is going to force things to go up. Okay. If you want to be not left behind, you should have assets, stocks, gold, silver, Bitcoin, like that mix. Other than that, or you own land and real estate, and that's illiquid. So point is, like, just don't ignore what this market is good at. Just don't ignore that every time we've seen these big corrections in the market, the haves that have enough to buy more and continue to own more assets and add more assets, they end up having more. The have-nots that fall behind continue to get further and further behind, right? We're about to embark on maybe the next 10 years of having no middle class, because there's a decision to make as someone in the middle class. You either participate in where this market is going, or you get left behind with a debasing dollar and loss of purchasing power, and you just continue to fall further behind. So anyway, there's my PSA and my rant for the day, Nick.
Chris, that was great. I think actually you mapped out maybe the bigger question is not, is the market going to go, and I've been thinking about this a lot. The bigger question is not, big picture, is the market going to go up or down, but rather, if the market goes down, what do you allocate to? I saw you earlier talking about allocation. I think that's the better decision. It's one thing if you want to be active in these markets, and it's not necessarily about like calling the top and bottom of every single move in the stock market. Right. I think some of the bigger questions are, how much allocation at certain times do you want to do? We've talked about that many times on the show. How much do you want to have in the S&P 500? When do you want to step in and buy dips? Where do you want to close out of stuff, right? And I saw you breaking that down. I think that's really, really important that we're thinking about that. Is like, ultimately, don't fight the way of the market, which is over time, assets should rise in price. Like they're designed to rise in price over time, because look at the inputs. You have more currency being printed every single day. Like, naturally, things should go up in price over long stretches of time. Doesn't mean they have to go up every single day. And as traders being more active, I think we can spot maybe opportunities or better spots to put money to work at certain times.
Yeah. So I think that my big decision today was I'm looking at GLD, and I think we mentioned this yesterday. This 200 period moving average, we're nearing 490 bars here, Nick. I think that whatever happens with FOMC with the dollar, I think that the dollar right now is a bear trap. I wouldn't be surprised if we, poke the lows here, but it's going to sucker in all the stop losses. It's going to, it's going to stop out the stop losses. I think there's going to be a reversal and potentially a short squeeze here with a bit of a risk off flow. The dollar still secularly bearish, so I think selling the dollar at 100 or 101, 102 makes sense. But I think a squeeze on the dollar, a volatility play on bonds, and maybe a dip in equities, I think that's an opportunity to get positioned again for the next leg. So if we get it, and this is what would be easier for me as a trader, is we get a leg lower that we can welcome, we can not be scared about, and we can then embrace, like, okay, I'm going to start allocating for some of these dips. I'm going to put some strategies on that allow me to benefit from when this market finds maybe a 5% correction, 10% correction. we start positioning for that. So I want to dip. I hope we get one. The timing of that second half of September usually is the weakest part of the month, and we're there. It's like officially like now to the end of the month. I'd be shocked to see September go higher. Nick, we've already had a 3+% September. So now looking at the weekly time frame, this showing a bit of an indecision candle. This could be a perfect little evening star where it's bullish decision, indecision for this week, and then a bearish decision next week as we round out the month. And that might chew into the monthly gains, which is, look at the September candle. This is no joke. This is bigger than August. This is bigger than July. Like, this is a September rip. That's pretty crazy. So
yeah, I mean, it's Chris, it's a melt up, it's
sure.
your classic melt up. You have a lot of the high flying names and exciting stuff. And I know I'm glad you're back on the show. I saw a bunch of people in the chat excited that you're here too, Chris. We're going to get more from you. I'm going to kick you out now because we've got this next segment starting here. But before we do, guys, Chris Pulver is a wealth of knowledge. Dude's got tons of trading experience. He's been doing this for 20 plus years, and he's going to be a regular on our show. So if you're enjoying the A1 Trading Show, make sure to subscribe. Make sure to hit the thumbs up and all that good stuff. But also, if you want more from Chris, there's so much to learn for free from his YouTube channel. Here it is in the chat. Just find him at Chris Pulver. And finally, Chris also offers a service within our Discord. You can actually see the trades that he is taking inside of the Pulver Alert service. If that is something that you're interested in, here's how you can get some information. We'll drop a link in the chat to where you can speak directly to our support team, or you can explore the Pulver alerts here on our website, a1trading.com/pulver-alerts, trades, options, FX, a good bit of stuff, and you can stay up to date with them. Chris, thanks very much, man, for coming on the show.
Yeah, thanks, Nick, and have a great trade battle today.
Thank you, man. I appreciate it.
Yep, take care.
All right, guys. So we are, again, counting down, as you heard there just a second ago, Chris Pulver mentioning that we have a trading battle here today, which is going to be fun. We're going to be trading the FOMC event live. Of course, I'll be sharing some analysis as we get going here. Also, check out our new QR codes. We've been working on the stream layout here. If you want to join our Discord, you can do so for free using the QR code that's on the screen there. Pretty cool stuff you got there. Look, gold and silver well, they were down more earlier. We had gold and silver getting crushed in the London session, and then we kicked off New York, and bulls came back in. I am out of the silver trade. I took profits on it. Price broke through a level that I had drawn on the 4-hour chart, and I am officially out of the trade. I closed it out and shared an update inside of our Telegram channel. It was a heck of a trade. I wish I had 1,000 more of these every year. That would make my life easier. But we did end up doing pretty okay on that one. And again, things looking just fine on the silver side. I am out of the trade, however, and feeling just fine with that, especially with FOMC right around the corner. You could get volatility in metals. Please understand that there is a wide arrangement of events that we could see here with the Fed meeting. I heard, if you've been watching the show all day long with us here, we've been live for the last few hours. I listened to most of it today and heard specifically from, I was listening to James's segment, FX James. He was talking about how 25 basis points is pretty much the expected, right? That is probably going to be the least market shocking. Well, actually, it certainly would be the least market shocking. The market expects us to cut by 25 basis points. That's a 0.25% cut in the Fed target rate. However, what if you got 50? I don't think it's very likely. In fact, the market doesn't think it's very likely. Consensus is still 25. That's what I think they're going to do. But if you did get a 25 basis point cut, the market would have some serious repricing to do. Again, you may have heard this expression, priced in, right? The market prices in what it thinks it's going to do. And when you get a shock or a surprise to that expectation, that's where you get huge moves in markets. So today we are expecting 25. If you were to get something more shocking than that, like a 50 basis point cut or a hold, both of those are very, very unlikely. But if they were to happen, the markets would go absolutely crazy. A 50 basis point cut would probably send stocks flying through the highs. Same with gold and silver. And if you see, for example, a no cut, which is very, very unlikely, if you were to see a no cut from the Fed, stocks and commodities would likely, specifically gold and silver, would drop like a rock. The rocks that they are, right? Gold and silver rocks. My point is, when it comes to today, We're looking for 25 basis points, but many people will make the mistake of obsessing over this number. Most likely 0.25% is what we're going to get, and that's not going to be what the market really cares about. I heard James mention this earlier. The real thing you want to pay attention to is the G word, guidance. We are going to be hearing from Jerome Powell. His press conference is set to be at 2:30. That is an hour and 20 minutes away. That commentary is what will move the markets. If you want to talk about what's going to make the markets freak out or go crazy, it's probably not going to be the rate cut itself. This is expected. That won't move the markets. It's like if I told you every day for a week, it's going to be rainy on Saturday, and then it rained on Saturday. You'd be like, yep, kind of expected that. That's not what's going to move the market. If on Saturday, I told you that not only is it going to rain all week, and then on Saturday we're going to get rain, and then we get rain. It's like if I told you, well, for the next month, we're also going to get rain. That would be a surprise. You'd be like, oh, shoot, that is new information. The market's always looking for new information about the future. It doesn't really care about, like today, the markets are no longer trading about this. They're not trading on today's cut. They're trading on what's going to happen next month and the month after that. And this is always how markets behave. They're always forward looking. Nobody cares about the news of today. Everyone cares about the news of tomorrow all of the time. It's a little bit of a brain twister, right? It's a little confusing at first, but that is how markets trade. They always look ahead. Today, we know the Fed's going to cut rates. That's pretty much a certainty. That's not what will move the markets. And that's what sometimes people will be like, well, they cut rates. Why didn't the dollar drop? That's not how it works, right? If they cut rates today, the dollar already expected that. The dollar will not move. If they cut rates and that was all they did today, they didn't comment on anything else, the dollar would pretty much not move very much. What will move the dollar, what will move gold, will move indices, everything will move based on what is said for forward expectations. Okay? Does that make sense? Just a really important note that we are on the same page with that. Dollar index, I heard Chris talking about this, thought this was a good point. You're coming into some major level of support here on the dollar index. The dollar play, look, I think that the easy money on the dollar trade is behind us. I know that's there's never really truly easy money per se. But this week we did get some retail sales numbers, which were a little bit better than expected. You still have inflation. So inflation is still going to hold the Fed, in my view, from just cutting. Like you're going to get rate cuts, but we're not going to get like speedy, dramatic rate cuts because you still have inflation that the Fed is going to be worried about. So my perspective is you're going to get a 1/4 point cut because the labor market, as we heard from James earlier in the show, the labor market really needs it, right? The labor market is showing signs of weakness. Inflation, however, is also showing signs of stickiness. Look at what we're reading here. CPI year over year is at 2.9%. Although this was in line with what forecasts for inflation were to be, this is still on an absolute basis. 2.9% year over year inflation is a good bit of a distance away from the Fed's 2% target. So stay tuned on that, because again, if inflation is sticky and we also have labor market weakening, what do you do? Do you cut rates, or do you hike rates, or do you hold them? Well, the Fed today is expected to make a 1/4 point cut because the Fed themselves believes that their level of interest rates is restrictive to the economy on purpose, right? They're trying to restrict the economy a little bit to get inflation to go down, right? Inflation can flare up if the economy is running really strong. So they've been purposefully trying to restrict it. I know this is a little bit confusing if you're new to fundamentals, but again, it is what really matters to the market. That's why it's going to move, is the fundamentals here today. By the way, if you want to try out the EdgeFinder, maybe we have a new screen or scanner for this. Maybe we could pop up the scanner. You could use the QR code if you want to try out the EdgeFinder. We do have a free version now available on our website. So check this out. We'll drop a link here in the chat. Maybe we'll also pop up the QR code here on the screen if you want to scan this to get access to, there it is. Boom, check that out. New 30-day trial you can scan here, or use the link in the chat or in the description, wherever is easiest for you to track along and get access to the EdgeFinder. We do have a free version now available, and that link will take it to you. Okay, so boom, there it is. So yes, long story short, the Fed is stuck in a situation. They're stuck between a rock and a hard place. That's what I've been saying, which has been sticky inflation, and weak jobs numbers. Are you going to watch the FOMC with us? So I am going to be watching during the FOMC for sure, but I'm going to be doing so on our next stream. We're going to be doing a live trading battle, which is going to be starting in 15 minutes. I hope you guys will join me there. We're still going to be streaming here up until the bell, at which point we will drop the links everywhere. You can follow us over, and we're going to be trading that live with some of you guys might know the guys we're doing the show with. It's myself, Etienne Crete, if you know the Desire to Trade podcast. I'm sure many of you have seen his podcast. I love his stuff. And then also Blake Morrow. So we've got a crew that's going to be trading the battle or battling it out, trading live during the Fed press conference, which I think is a really fun segment. So we will have that coming up very soon. So that's our next show segment. I'll be hosting the battle between those two guys. Okay, so VIX is up here a little bit. You also have dollar index. So here's my opinion on this. If you get a dovish, like a real dovish Jerome Powell, this dollar could be headed lower. Like we could be seeing the break through these lows. I do think that Powell is going to be dovish. I would not be surprised if that does lead to dollar weakness continuing here and metals continuing to push higher. However, again, it really just depends because the Fed. Does Powell lean into this idea that he has been on, which for a long time he said, labor markets held up pretty well and inflation is really still important to us. And, if he sort of like stays centric to the mandate, I think that actually could bounce the dollar, right? Because they've been very, very much so sort of in the middle between, inflation's a problem, jobs are a problem, right? If they lean more towards the jobs market being a problem and something that they're drawing their attention to, down we go on the dollar, right? Gold and silver are going to move higher because that would be a response to, okay, Fed is going to cut those rates to get the labor market back under control, or at least try to. I have a little sneaking suspicion that the Fed might be a little bit behind the curve. And if the Fed is behind the curve, what that would lean me towards is more dollar bearishness. So I don't think that the dollar trade is as attractive at these lows, but if you were to get a bounce up to the upside here today, I actually think that could be an opportunity to sell the dollar and look for further weakness. That's my personal opinion. Or if you were to get a huge flush, basically if they were to surprise with a 50 basis point cut, or for example, if they were to signal that they have plans to cut more aggressively, or that the labor market is severely under pressure, something like that, right? If they give that dovish cue, I think dollar index can move lower. I'm going to say this. I think the path of least resistance for the dollar here today is to the downside. I would be surprised if they came in hawkish, and so would the market. I'm pretty sure that would cause a severe, sharp move the other direction for the dollar. So path of least resistance for me is going to be following the trend, not just the technical trend, but also the macro trend, which has been weakening jobs data and rate cuts being priced in. I think that is likely to continue to be the directional bias that I'm going to have when it comes to the dollar. However, the risk to reward, just like shorting at these levels, not for me, right? So I can't just go out, buy euro dollar, buy pound dollar, buy Aussie dollar. I'm not going to do that. However, if you were to get a bounce, which I would love, because if you got a bounce on the dollar index, it's going to set up some of the ideas that I've been talking about on the show. Like, for example, a buy the dip opportunity on the Australian dollar versus the US dollar, perhaps a look at the pound dollar on a retest of these areas. Like, if you got some dollar strength today, I would welcome it. As a dollar bull, I would like that. It would give us a chance to reset, reload. I could possibly look to buy the dip on gold. Like, I would love, as a dollar bear, for the dollar to go up today, because it would give some opportunity, in my opinion, to reset this move that we've had, right? This dollar downside move. If you give me a bounce here today, most likely that is an opportunity for me to start leaning in on the short side once more. I took profits. If you are just tuning into the show, I took profits on the silver trade. I'm all out of it. Took profits this morning. And we are out, all good on this one. Ended up closing a really nice trade, and I wouldn't be opposed to re-entering the trade. If you got a day down here today or a couple days down, I'm going to keep an eye on gold and silver for possible pullback plays in the meantime. I think gold is stretched like everybody else. Like, let me just say this. I know there's a lot of people in here that say, every day for 2 weeks, they've been saying gold is stretched. It's got to come down. And I had one guy telling me constantly that his mentor was promising him that gold was going to go down. And I'm like, first of all, why do you have a mentor? Second of all, I'm just kidding. I mean, there's nothing wrong with mentorship, but one of the traps people think is that like, oh, my mentor, he's so good at trading. Well, have you seen his account or track record? Because a lot of times people sell mentorship without any proof of concept. That's not today's stream, but please be careful who you follow and spend your time listening to. Make sure they actually trade and they actually are profitable in what they do. If you'd like to see my personal performance over the last 6 years, you can do so. It's pinned on the top of my YouTube homepage or on our website, a1trading.com/track-record. You can always find my trading records there for transparency. So, and again, I say that because I think it's really important that if you're going to spend time listening and learning or even purchasing something from someone, that they actually have results to back what they do. Okay. So I had somebody, like I said, telling me constantly, you know, my mentor, he's really good at trading and he keeps telling me gold's going to go down. Just trust me, just trust me. And I'm like, look, your mentor, just like me, does not know what the market's going to do with certainty today or tomorrow or next week. Okay. That's foolish. That's how you blow money up. Nobody knows. The sooner you accept that, the the trend is your friend and nobody certainly knows what the market's going to do next, the better off you're going to be. I learned that the hard way, just like most people will do so as well. I don't know if gold is look, yes, it's stretched. Does that mean I short it? No, the fundamentals look great. The Fed is cutting interest rates. The labor market is weakening. Inflation is sticky. That's not an environment we get short on gold. In any fundamental macro trader will say to you, that's not an environment where gold is an obvious short. That's an environment where gold and silver are buys on dips. And in my opinion, that's how I'm going to trade it. So here's I'm going into FOMC very flat. My positioning, I'm very, very flat. I do have some stocks that I own with covered calls written on them. I'm long things like Tesla. I sold my Nvidia for a really nice profit. I also own, I own Google, I own Amazon. So I own a bunch of individual stocks. On most of the stocks that I own, Robinhood also, a lot of the individual stocks that I've sold, I've also bought and I'm holding. I also have covered calls open on those positions, which hedge a little bit of the downside in exchange for capping my upside. So my opinion on stocks is, I think, also going off of this idea that stocks are a little bit stretched. The difference here for me with stocks, though, is that stocks are stretched in an environment that I don't necessarily agree with. Like with gold and silver, I look at gold and silver and I say, they should be stretched. They should keep being stretched. The macro looks great for gold and silver. I would argue that there is a case to be made that the macro does not look as attractive for stocks. Now, there are some forces at play here that are really great for stocks. Like, for example, corporate earnings have been really strong. The AI trade is just getting adopted more and more. Like, there's some real exciting stuff out there. Technologies are for the best and or getting better every day and driving stock prices higher, especially specifically in tech stocks. But the macro that I just got done discussing that plays in favor of gold does not necessarily play in favor of stocks. In fact, to me, it looks mixed to negative at all-time highs. The risk to reward just isn't there for me to go long stocks. You give me a dip on stocks, there might be some individual names and some sectors and some industries I could buy into that we could talk about more in future videos and streams. But where we currently sit at all-time highs with the Fed cutting interest rates, is this a sell the news event? I would lean more towards yes than no, but I'm not short the market. I'm not going to try and call the top on the S&P 500. I heard Chris do a great job illustrating that phenomenon. We don't necessarily want to be trying to call the top of this move. I know there's going to be a ton of people out there buying puts on the SPX and betting it short and same with gold and silver. And if that is your style and you have a strategy that works for you, the only thing I can think of that would work in that way is just tiny positionings, because there's a good chance you're going to be wrong in the timing with that. But in my opinion, path of least resistance, stocks can continue to go higher just based on the momentum, but they would be more attractive. And I could justify the risk reward if you were to get a pullback in combination with a little bit better macro. You give me a little bit better on the unemployment claims tomorrow, some jobs data that shows me we're not falling apart, and I'd probably buy that dip. That combination, that's a buy for me. But at all-time highs, macro looks weak in the jobs market, inflation's still sticky. You're just not going to catch me buying stocks up here. I've done really well this year with stocks. I bought a lot of stocks during the market sell-off. I'm saying that because I've been wrong and missed some of this move to the upside, but I'm not going to cave and capitulate and buy the highs, because I think a big part of stocks is they can move to the downside very, very quickly. Guys, in just a few minutes, we've got a trading battle that I am going to be participating in. Well, actually, I'm going to be hosting the battle between Etienne Crete. Many of you guys probably know him from his podcast. And of course, Blake Morrow. We're going to be trading this thing live. So if you want to see trades being placed in the live market right during the FOMC meeting event, we're going to be doing that here. This stream is going to be ending in just a few minutes. Maybe if Chandler James, there we go. You guys beat me to it. The trading battle is going to be going live here in just a moment. So what we're going to do here is, this is the link to join. Go ahead and open this up in another tab, or just go ahead and click over there. We're going to be ending the stream on this side here, I believe. So this is going to be discontinuing, and then we are going to, of course, be moving over to the trading battle, which is it's a stream. Today is going to be sponsored by DNA Funded. We're going to be trading live on that stream. I'm going over to host it. It's going to be a lot of fun. So I'm not going anywhere. The stream will end unless you come with me to that spot. So yeah, should be really fun. So we'll give it just a second before we move over, but the link to that is in the chat here down below. The dollar index, like I said, to me is a sell on strength personally. So if I get a bounce back, like a move back up to 97.30 or 97.90, I mean, guys, please expect volatility. Please be very careful today. VIX is on the rise. I would not be surprised if this thing spiked. If you got something like a surprise hawkish cut, that would be a market mover for sure. So please be careful out there. We are going to, like I said, be live trading this. We're going to be going over to the stream. So one more time, if we could drop that link here in the chat, guys, we're going to end the stream here on this side, and we're moving over to the trading battle for the official event. Follow me over there. It is in the chat right now on the live stream chat here on YouTube, or search up on your device, the trading battle. I'm going to be hosting 2 traders going head to head and commenting on what is happening live here in the markets. All right, guys, I'm peacing out here. See you over on that show right now.
Thanks for watching today's show. Remember to subscribe if you're new, and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.